Good afternoon and welcome to today's webinar titled Payment Facilitators, the revolutionaries of payments acceptance and how to overcome the hurdles of becoming one. Thank you so much for joining today. My name is Mélisande Mual and I'm the publisher of ThePaypers, the Netherlands-based independent leading global source of news and analysis for professionals in payments, fintech and commerce. And I'm delighted to co-host and moderate this webinar with Limonetik. Limonetik offers a B2B comprehensive payment solutions on a platform as a service basis, which addresses all needs of international multi-channel retailers, marketplaces, payment issuers, payfacs, and acquirers. In this webinar, we will discuss the different type of payment facilitators and their role in the payment value chain. We will look at the essential tools they need to use and will describe how Limonetik has supporting such companies by providing payment facilitation framework services or by enabling them to become payment facilitators in their own right in a fast and easy way. Before introducing today's panelists, I would like to start with some quick notes regarding housekeeping. The presentation will take approximately 30 minutes and we will have 15 to 20 minutes for a Q&A at the end of the webinar. Do not hesitate to type in your questions. You can ask them at any time throughout the presentation by typing them in the webinar Q&A window. During the presentation, we will compile the questions and at the end, the panelists will take as many as possible, and if not, they will address them later. So, Christophe and Masha, would you please introduce yourself briefly and kick off the discussion?
Hello there. Hi, thank you very much for the introduction. As I'm about to join, my Wi-Fi is throwing a message saying you have limited connection, so I apologize in advance for any technology issues. So very quick introduction. So I'm Masha. I have been in payments for over 25 years. And I worked for the schemes, I worked for large merchants, and I also worked for a number of payment providers. And I finally decided that the path into the future was to consult. So I'm working for B-Shape in the future, European consulting company, and my particular passion for the last few years has been facilitation of payments, marketplaces, and really new solutions for the online commerce. So I'm really excited to be here today and to talk a little bit about payment facilitation.
Thank you. And I'm Christophe Bourbier. I'm the CEO and one of the co-founder of Limonetik. That is, as you said, Mélisande, a B2B white label payment platform that enables payment facilitation, that enables acceptance of international payments. That's what we are going to show today. So I'm not going to go too more into details.
Okay, so let's go to the next slide.
Go to the next slide. So first of all, I wanted to start with talking a little bit about some of the latest payment trends. Here are just the top 10 that I could pick up. There's, I'm sure many of you will argue there's a lot more. But generally, if you look at the payments industry in the last decade, online sales are definitely the fastest growing part of the payment processing. And if we look closer, then we realize that actually it's the cross-border payments which are growing even more. And this is both a customer present and customer not present. Obviously, with the recent lockdowns, the customer present cross-border has decreased significantly, but we've seen a lot of increase in the cross-border online transactions as customers still want to buy goods and services from abroad, being used to the kind of the international marketplace. APMs, definitely, and I still put APMs there, although many of you will refer to alternative payment methods as local payment methods. Regulation is changing the payments and creating both the barriers and opportunities, and those are the opportunities that we'll be talking about today. Payment facilitation and aggregation is definitely growing, and this is we'll talk about it in a lot more details. Shared economies, so these are the marketplaces, gig economy, shared economy, platforms, and various other intermediaries are definitely emerging as new models. Importantly, both merchants and consumers expect omni-channel and generally smooth customer journey. Then we also see identity management, fraud management, and data management as some of the really key important trends. But for today, I'd like to just focus on the 4 of those trends. We'll jump to the next slide, please. The online growth, the cross-border, the facilitation, and the shared economies. Let's have a look at each of them individually. So next one, please, Alice. Online sales. So in fact, when I did this slide last year, the expectation of last year's volumes were 3.46 trillion, but it surpassed the expectations at 3.54 trillion. So the online growth is huge. It is still there's still a lot of markets which are coming on board, both internationally and internally. There's also a lot of SMEs joining the online revolution, and I think it'll be interesting to look at these numbers after the kind of the storm of lockdowns and COVID have passed, because we will see that many of the SMEs will be going into the online to improve their supply chains and to rebuild the consumer confidence. So next, we'll look at the cross-border. So the next slide, we've got, again, if we look at the actual cross-border sales, the growth is in double digits. So the kind of turquoise green is the cross-border compared to the lighter green on the domestic B2C. You'll see that in the last couple of years, we are getting closer to pretty much half and half. There is obviously a big variety market from market. Again, this is not the purpose of this particular presentation, but there are particular online cross-border routes which are being explored by consumers. So there's a lot of interesting developments there as well. So next, another trend I want to pick up that's quite relevant to the payment facilitation is the shared economy. So some of you might have heard me talk at the previous webinar, and also I've been posting a lot of statistics. The report we did last year, looking at the potential of the marketplace or platform world. If you look at if you look at the B2C and the B2B numbers there, the expectation is that a very large portion, nearly 70% of the e-commerce will be through some type of platforms in 2024. But more interestingly, a much bigger chunk of B2B is expected to move online. So who is servicing these kind of industries? So how do B2Bs sell to each other? Well, for that, we need payment facilitators. So the next slide, we'll talk about the payment facilitation, and the only research we could do, next slide, please. So the only research we could do to kind of find out what the official numbers for payment facilitation is looking at Visa and MasterCard's website. No, we'll come back to the previous one. We discovered just over 1,000 registered PayFacs with MasterCard and nearly 600 with Visa. So those are the middlemen in payments who are helping to process transactions. So not all these transactions that I've just talked about are being done by the merchant working directly with the acquirer. There are these, and these middlemen could be in technology, they could be in the physical world, providing the point of sale devices, but this is definitely a growing number. So next. Next slide, please. I think we're a little bit stuck. So as I'm talking about this payment facilitators, many of you are probably wondering, what is it that I mean about payment facilitators? Because there's definitely a lot of different definitions going around. So you see at the bottom, there's a simple value chain of payments. The payments facilitator sits between the merchant and the gateway and or acquirer, and then further the schemes. In the past, payment facilitators were called master merchant, or in fact, they were just pretending or acting to be a merchant, and then aggregated a lot of smaller merchants, or otherwise known as sub-merchants, for the acquirers. Often, acquirers didn't even know that was happening. And about a decade ago, the schemes were looking at these types of setups and saying, well, hang on, we don't actually know who the real seller is in this, who is the merchant, because we see in this large, and this actually started, I think, partially with companies like PayPal, where they just see the one big aggregator and they're not sure what's happening underneath. So obviously from compliance purposes, this was very important, but also from managing customer expectations, customer service, and so forth. So both schemes have come up with what they call a payment facilitator type membership, whereby the payment facilitator is sponsored by an acquirer, goes through a particular process, and then become registered. So the previous slide where I talked about 1,000 and a 500 odd registered PayFacs, those are these that have gone through that process. So effectively, it's a company who offers payment services, from processing the payment to collecting the funds, aggregating the funds, and paying out the funds to a merchant. So they act on behalf of the merchant to the acquirer, and on behalf of acquirer to the merchant. We jump to the next slide, please.
Masha, can I ask a question here, please? If you look into the value chain, do you also see payment facilitators fulfilling other roles in the chain? Because could they do the routing as well, or being as well an acquirer in the same time?
Absolutely. So in fact, on the next slide, we did put some types of payment facilitators. So if we get technology working, you guys will see that. But meantime, I'll continue to answer. So definitely, I think what we see now, the roles that the payment facilitators play are not just that of payment processing, because you start wondering, well, why can't acquirers go and do that themselves directly with the merchants? They often provide the top layer of technology, which is essential for the merchants, be that because of their particular sector, be that because of their providing additional data or device management functionality. So here I try to break these payment facilitators into 5 groups, if you like. So the first group, and that's the one that most of us probably most familiar with, those are the collecting PSPs. Now, in the past, I myself worked for Global Collect, for example. And Global Collect, it was one of those companies where this was before the PSD2 specific requirements, but they had the setup whereby they collected the funds from acquirers and then they paid out those funds to the multiple merchants. Since then, there have been a lot of other companies coming up. We're mentioning Stripe and Adyen, Capture as a Payvision, and many of those companies have eventually become acquirers in their own right, but some decided to kind of stay in that aggregation mode and acting as a PSPs. Now, too, it's also the various schemes, alternative payment methods. Often they become payment facilitators as well, because they are accepting and distributing payments. One of the things I want to mention as well, when we talk about payment facilitator, we often use this as the Visa MasterCard, so the scheme terminology. And as the scheme terminology, we assume that payment facilitators only work with the cards. However, you can facilitate payments, obviously, of alternative payments and various other payments. So that's important to understand. So I think payment facilitator, whilst it's a name of a program with the schemes, it's also a much broader term of aggregating payments by a variety of instruments. Then we have, again, well-known point-of-sale aggregators. So Square, iZettle, SumUp are some of the names that come up there. These guys have been doing more the customer-present world, but acting as that intermediary, signing up the merchants and providing merchants with the payments. Can you guys hear me okay? Because my video keeps freezing. You hear me all right? Okay. And then the marketplaces. So very few are actually registered with Visa and MasterCard as payment facilitators and marketplaces, but indeed many of those have become effectively payment facilitators. And indeed, there are some other companies, and it could be insurance companies, it could be even legal companies that could be acting as payment facilitator, i.e. Collecting the payments from the payment institutions on behalf of their merchants and then paying their merchants. Reality, there's so many PayFacs who are not registered, and many acquirers don't even know that they may be dealing with PayFacs because they think of them as merchants. Again, in my consulting, I have come across a number of cases where acquirer had to switch off such merchant because when their compliance realized after 10 years of processing, these guys were actually a payment aggregator, they felt that they couldn't work under the same model, which is obviously a challenge for both the acquirer and the merchant. Go to the next page, please. So whilst we're doing that, I'd like to, so I guess what has happened is from that, looking at the acquirer's point of view, how are they working with payment facilitation? Well, some acquirers have actually specifically addressed payment facilitators and targeting those payment facilitators in order to build their penetration into the market. So I've mentioned a few names here. I've actually noticed that some of you guys are listening to us today. So, you know, great. And that they have a program and they have kind of a streamlined approach for these. There's also specific, some small payment facilitators, which are very interesting from the point of view of accessing specific verticals. I've, again, given some names there as examples, but it could be government, it could be marketplaces or online rentals. There's definitely a lot of companies who are trying to service a particular niche. But importantly, in order to stay compliant with the new, more stringent scheme rules and the local regulation, acquirers have to review the existing processes of how they work with these payment facilitators and ensure that their solution is both compliant and they either add a layer or new solution, but there are tools that they may need to monitor their payment facilitators, onboard their payment facilitators. Those tools didn't exist a few years ago. And as so many of those aggregators are still invisible, then we really feel that there is a lot of work to be done, both by the acquirers and by technology companies, to help those payment facilitators to stay compliant and to act and to in a proper transparent way. So on the next two slides, I'll summarize what I talked about by highlighting the benefits of being a payment facilitator and also talking about the challenges, and then I'll hand over to Christophe. So the benefits, there's financial benefits, there's technology benefits, and there's sales benefits, and obviously there's a lot of subsections thereof. So financially, why do companies want to become PayFacs? Well, they will get a higher margin. So if they were just to introduce the customers, or if they were just to act as a processor gateway, they only get often flat fees, or they're kind of at the mercy of what the acquirer may give them as a revenue share. If they are signing up the sub-merchants themselves, they're obviously getting a percentage of the fee or of the transaction value, and it's a higher fee. They often can manage the application of the sub-merchants a lot quicker. So whilst with acquirers, the merchant application may take weeks, with many PayFacs, it will take days. Therefore, they go to market quicker, so the revenue starts ticking a lot quicker. And they access, and really this is the fundamental, for the acquirers, the PayFacs add a much broader selection of clients that otherwise, you know, it could be SMEs, but it could be a particular sector, and acquirers themselves may not be able to get into that sector directly. They also have, so looking at technology, they have better onboarding tools, which lead to quick application. They may offer, so to Mélisande's question earlier, they may have certain technology that will be specific to a sector. It could be integration to a reservation system or shopping cart or an ERP system of a marketplace. So, you know, so it increases the volumes, and obviously they help and they can spot and address new opportunities in sales, which acquirers themselves often cannot do. But on the next slide, you will see that whilst seemingly, obviously it's very clear that everybody wants to become a payment facilitator, there are some challenges as well. So if we can jump to the next slide, please. Then the challenge is, you know, yes, it's great, you get better revenues, but also merchants are responsibility of payment facilitator. If there is a default chargebacks, it's PF who is responsible. And then if there is a high number of chargebacks, not only PayFac will suffer, but it could be the acquirer who's supporting them, because that is reflecting on the acquirer's overall standing with the schemes. Now, I talked about the great technology about online onboarding, but you need to have the tools. There's KYC underwriting function to ensure that you don't sign up fraudulent, insolvent, or illegal merchants. And that's definitely where we've seen some of the struggles that PayFacs are facing, because they may not have the sophistication that the acquirer has in terms of checking very thoroughly each application to the level that the acquirers do. You can argue that for small merchants, it's not necessary, but you need to have the tools, and there are tools available. They need to have good tools to manage the funds on the way out. So the escrow, the ledger, there's certain regulatory requirements from how the funds are being managed. You can't pile everything together and put it in your bank account. You have to keep the funds separate. You have to report on it. You cannot pay one sub-merchant with another sub-merchant's funds. And the acquirers themselves may need tools I referred to earlier in order to manage such PayFacs. So from sales and partnerships, I guess the biggest challenge is how do the PayFacs differentiate? So what is it that why would a merchant go with a PayFac rather than go directly to the acquirer? So it needs to be clear about that proposition and not to compete with your partners. And finally, the PayFacs may end up having to work with multiple acquirers to cover different territories, which means that it's a great service for the merchant, but it's quite tough for the payment facilitators. So that concludes, I was trying to fit in my 20 minutes, that concludes my part of the presentation. I'd like to pass over to Christophe, who will talk about some of those tools that Limonetik has developed, and I think we will have an opportunity for questions at the end, Mélisande?
Yeah, absolutely. And
Christophe.
Okay, thank you, Masha. So Limonetik, what do we do? So first, before I jump into PayFac, 2 words about Limonetik. Limonetik, we are, as I said in the intro, we are a B2B white label payment platform, and we work for payment players. We work for gateways, we work for acquirers, payment institution, PayFac, payout providers, payment method wallets, and also a few big international merchants. And what we do for them is that we help them to connect, accept, and acquire the funds of more than 200 payment methods. So we are connected to any credit card, but we also do a lot of wallets all around the world. We do a lot of instant payments, bank transfer. We cover 60 different countries. And so we help those players to accept those payment methods, and we help them as well to do payouts of the funds they have received and help them to do that real time, taking into account different fees. And we also do a PayFac enablement, because what I said is about enabling payments, make payments facilitate payments. When it comes to PayFac specifically, what do we do? So we can either work for existing PayFac that have not been compliant, but that would like to become compliant and respect the last Visa, MasterCard rules, or that wants to make sure that their sponsored acquirer will be happy with their process. We can also work for PayFac to be aspiring PayFac in a way that wants to focus mainly on time to market, on services, on their differentiator, that don't want to spend time on rebuilding all the technology that we have, and that want to go very quick on that, and that want to make sure that if they want to go and see and acquire a sponsor, that this sponsor will say, yes, I'm fine with your technology, you can start working. Okay, and last but not least, we can also work for acquirers. We saw that a lot of them did well by working with PayFac. And so we can work for acquirers that wants to offer that PayFac enablement to PayFac to be and help them to launch quickly the services. Okay. So I'm going to do a demo. I'm going to jump into details, and I'm going to do a demo of a PayFac transaction. The PayFac itself is going to be the client of Limonetik. This PayFac is a payment institution. Can you see my screen? Yeah. So the PayFac I'm going to talk about is a European payment institution here. That payment institution is sponsored by a European acquirer here. That payment institution, that is PayFac, wants to offer marketplace full stack payment services marketplace full stack API to a merchant that wants to launch their marketplace very quickly. Okay. What we do at Limonetik is that we are going to offer our services in a box to that PayFac to make sure that that PayFac will be able to launch quickly that marketplace API solution with all the tools that are needed to make that easy, compliant, secure, and international. I'm going to show you what a buyer can see. I'm going to show you what a marketplace can see, what the vendor of a marketplace can see, and what the PayFac can see on that transaction. Okay, so I'm going to see the different parties involved view on that PayFac transaction. So, all right, I'm going to start with the user, the buyer. The buyer is going to go on a marketplace. In this example, you might see this is a furniture marketplace. The name is Conforama, and he's going to go on the marketplace because he wants to buy a table that is sold by the Conforama itself, but he's very interested as well by some chair that will be sold and delivered by some third-party vendors that sell that chair on the marketplace. Of course, the buyer wants to do one single payment and have those two transactions being done at the same time, but for him, it's going to be a very seamless experience, user experience, because you do one transaction only. And that's the power of a marketplace, because a marketplace retailer launch marketplaces because, of course, they want to sell their services, their products, but they want also to add some third-party extra products that they won't have to manage, that they don't have to manage the delivery, they don't have to manage the stock, they don't have to manage the after sales, and that's exactly this is exactly what we have here. So I'm going to connect through the Limonetik back office as if I was the vendor of the marketplace. So we saw the buyer experience, and now I'm the vendor of the marketplace. So as a vendor on that furniture marketplace, I want to have a dashboard, of course, where I can see all transactions that were done. So I'm connecting to the dashboard. I want to see all the transactions that were done on that marketplaces. I want to see maybe the split in between different payment methods that has been used to pay. I want to do some analytics on every transactions. Of course, I want to see the split of countries where those maybe those payments have been done on the marketplace I'm being connected to. Okay, so a convenient dashboard, easy to use. Of course, because I have that dashboard, I want it to be easy as well to find any typology of transaction. So I'm going to have a multi-criteria type of screen here to find any type of transaction that I would like to investigate. So for instance, let's go to that transaction with the chair that I've just presented, that 34 euro chair. So I'm going to find the transaction here of 34 euro corresponding to the chair. And here I can see that I've got all the details on that transaction as if it was a normal transaction. But what is interesting here is to see that for every transaction, I'm having some details on the tech part of it. So I can see the flag that says that the transaction has been processed, but I can see the note as well here that shows that the transaction has been settled as well. And when it comes to PayFac, that is very, very important, not just to be on the processing part of things, but to be able to go into the flow of payment, into the settlement part of things. Otherwise, you cannot manage correctly and efficiently the flow of payment from the pay-in side until the payout side. Okay? So in that transaction, I'm just saying, transaction correctly processed, And yes, we did receive the settlement of the transaction, and so therefore I might be able to do the payout. But before I do the payout to the vendor, I need to keep in mind that for every transaction on the marketplace or any transaction for a PayFac, there will be some fees that will be collected along that transaction. The fees that might be collected by the marketplace itself that need to make his living out of the work. Some fees that might be collected by the PayFac itself, in our case, the payment institution, the European payment institution. And so the merchant, the chair supplier, is not going to receive 34 euro, is going to receive 34 euro minus different typology of fees. We might get back to that. And of course, we give details on those fees to make sure that it's very clear for the merchant. And this was for one single transaction, but that vendor, that merchant, want to have access also to an account statement or a bank account statement that will give him details on every single transaction, every single fees that have been collected, and that will show him at the top of the screen how much money has been settled, how much money is expected to be settled, and therefore how much money he might be eligible to pay out, to pay out from there and ask for that payout on his IBAN. Okay, and that's what you see here. Lot of details in every transaction, and we can see here that we see the amount that has been paid out to that vendor. Of course, that vendor, in addition to that bank statement, you need to understand carefully and very precisely what has been paid out to him. This is why we give for every payout a detailed reporting that will show to the vendor that need to do his own accounting, and that might have a CFO that don't want to spend too much time on the reconciliation. So we are going to issue a reporting that explains line by line what has been settled to him, what has been paid out to him for him to do the proper to understand the payout. All right. So that was what a vendor can see now, and of course a vendor, we want a vendor to be quickly onboarded on the marketplace. So you don't want just that a vendor do proper transaction. You want also, as a marketplace and as a PayFac, you want to have a quick and easy onboarding tool and service. That's what I'm going to show here. So here we have a tool that can be white label, where any vendor will have to fill out different data about his company. He's going to also upload different typology of documentation that is needed to do the KYC process or PYB process. And that will be also very useful to do the underwriting for the PayFac that don't want to take too much risk. So many different typology of documentation, ID of the signing offer that we are going to validate real time, but also certificate of incorporation that we are also going to validate real time with our tools. And we are going to also check every beneficial owner that could be behind the company to make sure that we are not going to finance any Daesh type of people, and that we are going to respect the compliance rules along the way. Okay, so that's very automated. I'm going to accelerate. And then once everything has been uploaded, once every document has been validated, and that we did the proper AML and underwriting check that are very important, then we are going to finalize that onboarding by signing a digital contract, almost real time, and everything is going to be done in a few days only. So that's something that we offer. That's a tool we offer to or a client, but it might happen that our client could be a payment facilitation itself, or a payment institution, or maybe an acquirer that is already used to do itself the KYC on upload or the onboarding and the writing. So in this case, if all clients are fine with keeping their own tools, then we are going to offer to them some API that will just help them to validate the fact that a merchant has been onboarded, or a vendor or a merchant has been onboarded, and that they want to create an account in the Limonetik ledger. Okay, so we offer the tools, white label to onboard, do the KYC, do the underwriting, help for the underwriting, or we let that being done by our own client, and we just help them to enable them to validate an account creation in our ledger system. Okay. So I've just we talk about the buyer that wants an easy purchase, even though he has 1, 2, 3 X products sold by X vendors. We talked about the vendors that wants to have access to an easy dashboard, to a detailed account bank statement, and that wants to have a quick onboarding to start working very quickly. And now I'm going to see the marketplace point of view in that example. So a marketplace, of course, that is the client of the PayFac in my scenario. Again, the PayFac being the payment institution. So the marketplace first needs to be able to offer the different payment methods that are of importance in the country where the marketplace is. So as I said, we have more than 240 different payment methods that are available on our solution, on our platform. Everything into Europe, wallet, payment by installments, even gift cards, bank transfer of any countries in Europe, and also many countries outside of Europe. Okay, so first, the marketplace wants to offer the good, correct set of payment methods to make sure that buyer will find the good payment method to pay with. Now I'm going to connect on the dashboard on the back office as the marketplace, and you will see that the marketplace, of course, is going to have a view on every single vendor that is selling product on that marketplace. Okay, so we can see the chair vendor, but you saw just before many different other vendors, and that marketplace is able to give any type of rights of typology of reporting to every single vendor. So there is a lot of agility in what the marketplace can offer to those vendors. Okay, and also the PayFac itself, the PayFac that offer the marketplace services to the marketplace can also define every rules that they want for every marketplace. Okay, then the marketplace as well, a bit like the vendor, the marketplace has also to have access to a bank statement account as well, because the marketplace, of course, is going to make money out of every transaction done through the marketplaces. And so they have access to a screen bank statement that lists all the fees that they have collected for every transaction done with every vendors. And also you can see that here, the marketplace can have access to the amount that they can pay out to themselves. And we can also see that marketplaces might choose, define, select the way the marketplace is going to do the payout to the different vendors. Okay, so we can see that here. you can see that the marketplace here can select, define if the payout to the vendors of the marketplace will be done every month, every 10 days, every 2 days, and it's going to depend on the marketplace. But also, the marketplace can do that for every vendor here, but the marketplace can also do that through API that we give access to. So this will be payout API that the marketplace can use very easily just to request those payouts for itself or for its vendor. Okay, so very convenient way to define the payouts for marketplace and for the vendors themselves. Okay, I've got a few minutes left because, and I'm going to use that to show just the PayFac, the PayFac view in that scenario. And for the PayFac, so the PayFac, the payment institution, again, that wants to offer marketplace services to retailers. So for the PayFac, in this case, the PayFac is WebHelp. That's the European payment institution that is using our solution. So first, the PayFac is going to have access to all the vendors' KYC and has tools to track and follow every KYC and make sure that everything is done properly and correctly, and that might enable him to chase for merchants that have not completed the KYC and the underwriting yet. Okay. Then for the PayFac, and I'm not going to go into details, you want to give access to all the tools that will enable the PayFac to track all transactions. And what is very important to keep in mind is that what is complex on the PayFac part is that you have, for every transaction, you have money that comes in, you have fees that comes out to the vendors, fees that comes out to the marketplace, fees that comes out to the PayFac itself. And so there is a lot of fees to take into account for every transaction. And this becomes very complex to play with all those fees, that you have to collect, and to be able to compute, to calculate in real time at the very end what has to be sent payout to the vendors net of all those fees. And this is what Limonetik will be in charge of. That's what we call the ledger, the orchestration of marketplace and PayFac payment. And again, this is all about calculating everything that comes into to the engine, do the reconciliation, take into account every fee that has to be collected real time, and calculate at the end of the day what has to be sent to whom. And we have to do that real time, as I said, but we have to help the PayFac to do all the reporting and the monitoring of all the transactions to make sure that we can say for every cent that comes in, every cent that comes out, that we know exactly where that cent comes from and where that cent of money might go. And we issue reporting every day, every week, for the PayFac to show to the acquirer that they respect the PayFac rules, that they respect the acquirer rules that the acquirers might impose to the PayFac itself. So that's a lot of testing, 1,000 of tests every day on every transaction, and a lot of reporting. Again, we do that because we know that there are a lot of rules to respect, to be compliant with Visa, MasterCard, to be compliant with acquirers, and to be compliant with local FCA or local SAPR in different countries. All right. I mean, that's almost all I wanted to show. So we just seen the buyer, we just seen the vendors, we've seen the marketplace, and we've seen what it takes for PayFac to offer all of that in an easy way and make things happen very, very, very quickly for marketplace and for sellers. Okay, and as you understood, Limonetik offer all those tools on the shelf through one API, white label, to any type of PayFac or payment institution or acquirer.
Okay. Well, thank you so much, Masha, and also Christophe. Thank you for sharing your insights into the benefits of becoming a payment facilitator and how Limonetik can enable PayFacs and acquirers to work together. I'm really happy to start with the Q&A. We have some great questions from the audience. Thank you so much for reaching out to us during this webinar, and please do not hesitate to send in more questions. We will get to as many as we have time of now and take the others after the webinars one-on-one. So the first question relates also to payouts. Christophe, how do you see marketplace payouts, basically this field shaping up? There is a lot of confusion on sub-merchants KYC with PSD2. How should PayFac prepare themselves for payments for marketplaces in the future?
Well, there are more and more marketplaces all around. We know amazing marketplaces like Amazon, Uber, Deliveroo, and so on. But we see in the market that every retailer wants to launch its own marketplaces part, not just because they want to do a copy and paste of Amazon, because Amazon is Amazon and might not be replaced, but every retailer wants to have its own product sold by third party just because they want to offer nice one-stop shopping services to, in a way, to buyers that find everything at one website. And so complexity will come from this ability that you need to offer when it comes to those split payouts. So there is complexity coming from the payout itself to calculate, as I tried to show, this payout net of different typology of fees, but it's become even more complex when you have for one transaction maybe 2 products, 3 products, 4 products that will be purchased by a single buyer, and that you have multiple payouts to calculate for one transaction. And that here it's about MID and sub-MID management. That's about KYC, of course, but that's a lot about reconciliation, aggregation of business data that complexity comes from here, and about this ability to manage a ledger that will know real time what you owe to whom, even in case of complex mixed basket type of purchases.
Okay. Thanks, Christophe. Next question is for Masha. Masha, could you spend a few minutes and more detail on the role of PayFacs in the B2B space?
Well, PayFacs, yeah. So I think we combine it with some other questions potentially as well. There's a lot of questions about what about technology companies becoming PayFacs themselves? Why can't they do that? And I think the same for the B2B. So in order for somebody to facilitate the payments, they have to actually become a payment institution. They have to get themselves licensed. So in the B2B space, there's slightly different regulation than that concerns the consumer. But generally, in the B2B space, the exchange of payments often in any of the platforms doesn't happen. So if you look at things like Yellow Pages, I'm aware of some of the marketplaces that sell agricultural machinery, for example. But all they manage to do is to let the buyers and sellers meet, and then they go off and perform that payment elsewhere. I think the challenge there is obviously that payment facilitation will probably not involve cards in many cases. It will involve bank transfers, because we're talking about really large amounts of money, which there aren't. So to me, to grow the B2B, we need to have the platforms who are happy to take it upon themselves to become the Amazons, or in fact, the Alibabas is a good example of a marketplace which effectively is a payment facilitator between small businesses. So as I said before, I think there's huge growth in this area, but it's more who takes that role on. So why doesn't everyone become, why doesn't technology companies? I think there's another question about Magentas and Shopify's. Can they become themselves payment facilitators? Well, they could, but there is a lot of requirements, as Christophe has been talking about. There's a lot of things to build. So many of these currently provide the technology. In order to actually handle the money, you need the licenses, you need all the reporting, So to me, there are some companies in the technology space, like one comes to mind in the US, International Checkout, which helps US retailers sell goods abroad. They're in a position because they're collecting the funds anyway, so they could become payment facilitators. So in short, B2B, definitely there's more opportunities in payment facilitation there, but who takes that role and who actively plays that? I think we will see a lot of developments in that area very soon.
Okay, thank you, Masha. Christophe, you gave, in your demo, a couple of examples of the different roles. In the example you gave, could a marketplace itself be a PayFac as well?
Well, a marketplace could be a PayFac as well if a marketplace is able to respect all the rules that are imposed by Visa and MasterCard. But keep in mind that there are two types of rules to respect. There are PayFac rules, as we mentioned, as we explained, as we shown. And in Europe, you also need to be a payment institution. You need to have a payment institution license to collect the funds. So yes, a marketplace could be at the same time, could respect and build all the tools to be itself a PayFac, and it has to become a payment institution at the same time. But this is a lot of work to be done. I'm being biased by saying that, I know, but this is a lot of work to be done, and maybe a marketplace should spend more time on the products, on the vendors, services, on the portfolio of products and services they have and their marketing, than digging into all this compliant part.
Okay, Masha, you started the presentation with explaining some terminology, but what exactly is the key difference between a PSP and a payment facilitator?
Well, some and none, right? So I guess that would be the answer. So if you have a look at these lists, and you can access them on Visa and MasterCard websites on their PayFacs, you'll see that many names that well known to us as PSPs are there as PayFacs. Some are PayFacs in particular countries, and in others they become acquirers. So basically, the PSPs so payment service provider is a very broad term. So it could be anyone from a gateway who purely routes the transaction to a full service type payment PSP who actually collects the funds and distributes it to the merchant. So the latter have to become payment facilitators. To become so, they need to get their PI license in their local regulatory environment, and they have to go through that process of registration with the schemes if they're accepting cards. They have to find an acquirer who sponsors them. At some point, what we see as a trend is, well, some of those payment facilitator PSPs become acquirers. Again, IDN, Stripe are good examples of that. But some PSPs don't. And again, when I was talking about the benefits, the pros and cons, many PSPs, there's a lot more gateway PSPs than there are PSPs who provide the collecting services. The collecting services is riskier because you're underwriting those merchants. So many PSPs just do that technology. So that's probably the main difference to that question. So PSPs do all sorts of things, and sometimes they are PayFacs.
Okay, Masha, thank you. Christophe, what are sort of the options if you want to become a PayFac? You can build that in-house, these tools, or should you outsource it? What options lay on the table? And what are the pros and the cons?
Yeah, okay. Well, yeah, you have, like for many cases like this, you can do yourself all the technology that is being that is required to become a PayFac and respect the PayFac rules from Visa and MasterCard, and respect also the specific rules of the acquirer that might sponsor you first. Then you should keep also in mind that you want to do PayFac enablement, not just to do Visa MasterCard. So you should keep in mind that you want to do and respect Visa MasterCard's rules, but in Europe, in the rest of the world, you have to remind that 75% of transactions online are done with payment methods that are not Visa MasterCard payments. It's done with what we call alternative payments. And so yes, you could build that. do all the technology, the reconciliation, the ledger, the connectivity to ISV or to marketplaces software, and connect all to all alternative payments, for sure, then yes, you could get that license, payment institution license as well, that you need, at least in Europe, to collect the funds on behalf of third parties. You could do it. That's true. The second option is to do part of it. You can also do part of the things. Maybe, you know, I don't know, build yourself the KYC and onboarding tools, but let a part of the processing or the ledger to a third party like Limonetik, or just completely outsource everything from that technology and that on the license part to a player like Limonetik, and then focus more on your offer and how you market your services. Yeah, definitely.
Okay. Well, we are almost at the end of the webinar, so I would like to thank you, Christophe and Masha, for taking questions. We will get to questions that we did not have time to address during this webinar. Thank you all very much for your for basically attending this webinar. Thank you so much for your time. We will send you a link to the webcast shortly, and I wish you all a very good day and hope to see you in the next webinar. Thank you so much. Bye-bye. And thank you, Christophe and Masha.
Thank you, Mélisande. Thank you very much, guys, for listening to us.
Thank you.